Okay, what's up, guys? So I just wanted to do a recap video on one of the trades that I took last week and basically how we managed the trade and how it ended up working out. Okay, so we took IWM calls on this day here. And so I'm going to kind of walk you through the reasoning for that. So if we look here on the weekly time frame, you can see we had a nice range here. I don't know whoever would call a range nice, but we had a range here that we were trading in, right? And we had been trading in it for a very long time. And if you look at the chart, you can see we had kind of this high area and then this low area of the range. And we broke above it here and closed above it and then pulled back down and then created a bullish pattern. Okay. So that's what was significant to me. Now, I thought this could end up being a really big trade because if we look at the weekly time frame, you can see here, here's our range. We've got a squeeze, monthly squeeze that is yet to fire off, and it looks great, right? So you look at this, we're trading in this range. We may be breaking out. We're gaining bullish momentum to the upside on the monthly chart. On the weekly chart, you can see here, we broke out, pulled back, nothing too much on the weekly chart. Now we look at the daily chart, you can see here, we're creating a symmetrical triangle. Now, if it was any of these other times, there was never really something of interest. These other times when we came up and tested the range like here and here, there was no real interest. There wasn't a squeeze, there wasn't a pattern, chart pattern. So there was nothing really to interest me into the trade. But this time we had this break above and we pulled back and started to consolidate right below it, right? So buyers already pushed above this level, right? So there's a lot of stop orders from shorts were probably taken out. And we pulled back below and started creating a pattern. If we pull back below and just flush, then I would not be thinking to go long this trade. But since we started to create this pattern of trading sideways, we had a squeeze, we had momentum gaining to the upside. And then on top of that, we had a 4-hour squeeze right here. You can see here, this one wasn't picture perfect, but the daily was. And that's what we took the trade based off of. Okay, so, and then from there, if you look at the chart, you can see we had created a high here, pulled back, created a higher high, broke down, traded sideways, broke down again, and then we broke above. So what we want to see is a candle close above this high of this red candle right here. We got that here, but if you look, we had this higher low here, broke above, so then we broke back down. So then that creates a new downtrend again. This is what kind of happens when you get in chop. It gets a little weird, right? So we broke down, and then from there, we had this lower high that created a lower low. And then this day here, the day that we entered, we broke that, okay? So now if I delete that off, we broke this lower high that created a lower low right here. You can either do this candle or this candle. It's kind of your discretion. But there we had the break of that there. Okay. So that was the first thing. So we broke that candle or broke that candle's high. That was the lower high that created a lower low. So now that was kind of a buy trigger on top of the fact that we had stacked EMAs. We had a squeeze on the daily and the 4-hour. And then we had a nice volume increase from the day before. And from there, we broke out of the symmetrical triangle pattern. And then once we kind of broke this level here, this was the level that I was kind of paying attention to, was right around this area here, this level actually, right around here. When we broke, we got here and closed. So usually that's a good sign that we may gap up above the next day. And so that's exactly what we did. We gapped up above. And then we got to the end of the day on this was Monday. And from there, I was kind of we had CPI the next day, and I didn't want to risk my full position because I was up 120% on the trade. We had March expiration contracts, and we still had about a month to go, but I didn't want to risk the 120% that I had. So what I did was I took about of the third of the profits that I made, and moved that into a cheaper expiration or a cheaper contract at a longer expiration with a lower delta. So if we did gap up and continued to go, I would be able to play this monthly squeeze, right? I actually took the April, I think it was either I think it was the 230 contracts. And so I risked about a fourth of the gains that I made on the trade. And I knew CPI was high risk. And then from there, once we had that gap down the next morning, I cut my position at 50%. So I was risking a fourth of what I had made, and the chart still looked good. Everything looked good, right? It looked like we were going to continue to break out up to here, but CPI really threw a wrench in it, and I knew that was possible. So what I did was I managed my risk accordingly for the potential of a big pop or a big drop, right? I was sized for zero going into CPI, okay with losing it all. But we gapped down, took off 50% of my position, or I took off my entire position at 50% loss, but I was only risking 25% of the overall profits that I had made on this trade here on a full position, right? So that's kind of how it worked. And that's how the trade played out. But as you can see, I probably could have held, but 2020 hindsight, right? Because you can see here, we had the push back up, and now it looks like the squeeze may fire off, and we're actually above this day's high as well. So that's just part of the game. I'm in other trades. It's okay. We had a really nice trade on this anyways. And I have to think that I'd be much more frustrated if we continued to dump and I was gave up all my profits from the other trade, right? So that's that. Thank you guys for watching. If you have questions, comments, put it down below. And our link to join the free Discord is down below.